Good morning and welcome to the System1 Group Plc annual general meeting. Throughout the recorded meeting, attendees will be in listen-only mode. Questions can be submitted at any time by the Q&A tab situated on the right-hand corner of your screen. Just simply type in your question and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company can review all questions submitted today and publish responses where it's appropriate to do so. I'd now like to hand you over to Rupert Howe, Chair. Good morning, sir.
Thank you very much. Ladies and gentlemen, it is now 10:30. I'm pleased to welcome you all, including those joining remotely, to the 2025 Annual General Meeting of System1 Group Plc. As there is a quorum present, we can start the meeting. You may wish to follow the proceedings by referring to the notice of this meeting. First of all, I'd like to introduce myself, Rupert Howe, Chairman, and my fellow board members. To my right, James Gregory, Chief Executive Officer. To his right, Chris Wilford, Chief Financial Officer. To his right, Sophie Tompkins, Senior Independent Director, as well as other non-executive directors. Next to me, Phil McRae. Next to him, John Kieran. And at the end, Conrad Boner, who are all sitting here with me today. The notice of the meeting was sent to you in accordance with the Articles of Association of the company, and unless there are any objections, I will take the notice as read. Thank you. Before we start the formal business of the meeting, I'll explain briefly the procedures we will follow. You've been requested to submit questions electronically, and those that have already been addressed or will be addressed, those have already been addressed or will be addressed in due course. Today, at the end of the meeting, there will be an additional opportunity to ask questions or make a statement. For those in the room, when posing a question, please introduce yourself and mention if you're a member or a representative. For those joining remotely, please route your questions via the Investor Meet Company platform. We appreciate brevity to give everyone a voice. Remember, only questions from members, representatives or proxies will be permitted. You have also been asked to submit your votes before today. Those who did not do so but are eligible to vote will be invited to vote by way of a poll once each resolution is read out. Please be reminded that those joining remotely are not able to vote. To ensure we capture all shareholders' perspectives, we will conduct a poll on each resolution today. I'm appointing MUFG Corporate Markets, the company's registrars, to act as scrutineers. When you registered your attendance here today, you will have been given a poll card which the shareholders and proxies present at the meeting should complete and sign as indicated. In the case of corporate shareholders, the poll card should be completed by their authorised representatives present at the meeting or by their proxy. If a voter is both a shareholder and a proxy for another shareholder, or if you're attending as a proxy or representative of more than one shareholding, please use separate poll cards. On your poll cards, there are three options for each resolution. You can vote for the proposed resolution, against the proposed resolution, or you may withhold your vote. A vote withheld is not a vote in law and will not be counted in the calculation of the proportion of the votes for or against a resolution. Please complete your poll card by ticking the appropriate box next to the relevant resolution, depending on how you wish to cast your vote. Once all votes have been taken on the resolutions, please would you sign the poll card and hand it to the representative of MUFG Corporate Markets, who will be coming around to collect the poll cards. Should you require any further assistance, our registrars will be happy to help you. I can confirm I've been appointed proxy in respect of 8,250,595 shares. Resolution 1 is the resolution to receive the report of the directors and the accounts of the company for the financial year 2024-25. I formally propose Resolution 1 as an ordinary resolution. In accordance with good practice, I will let you know how shareholders who have submitted proxies have voted. Shareholders have submitted proxies in relation to Resolution 1 as follows. Shares in favour, 8,249,959. Shares against, 13. Shares withheld, 623. This resolution is now put to the meeting to vote. Please would you tick the appropriate box on the poll card. I will now close the vote. The poll is now closed. Resolution 2 is the resolution to approve the directors' remuneration report as sent to members with the notice of this meeting. I formally propose Resolution 2 as an ordinary resolution. Shareholders have submitted proxies in relation to Resolution 2 as follows. Shares in favour, 8,159,023. Shares against, 11,767. Shares withheld, 79,805. This resolution is now put to the meeting to vote. Please would you tick the appropriate box on the poll card. I will now close the vote. The poll is now closed. In accordance with the Articles of Association, all directors are retiring and are offering themselves for re-election. Resolution 3 is the resolution to re-elect John Kieran as a director of the company. As announced on 9th of July 2025, John Kieran has from 1st of September 2025 become a non-executive director of the company. He's therefore standing for re-election as a non-executive director of the company. I formally propose Resolution 3 as an ordinary resolution. Shareholders have submitted proxies in relation to Resolution 3 as follows. Shares in favour, 8,163,149. Shares against, 86,195. Shares withheld, 1,251. This resolution is now put to the meeting to vote. Would you please tick the appropriate box on the poll card? I will now close the vote. The poll is now closed. Resolution 4 is the resolution to re-elect Sophie Tompkins, who is a non-executive director. I formally propose Resolution 4 as an ordinary resolution. Shareholders have submitted proxies in relation to Resolution 4 as follows. Shares in favour, 8,242,331. Shares against, 7,013. Shares withheld, 1,251. This resolution is now put to the meeting to vote. Please would you tick the appropriate box on the poll card? I will now close the vote. The poll is now closed. Resolution 5 is the resolution to re-elect Chris Wilford as a director of the company. I formally propose Resolution 5 as an ordinary resolution. Shareholders have submitted proxies in relation to Resolution 5 as follows. Shares in favour, 8,240,326. Shares against, 7,013. Shares withheld, 3,256. This resolution is now put to the meeting to vote. Please would you tick the appropriate box on the poll card? I will now close the vote. The poll is now closed. Resolution 6 is the resolution to re-elect Rupert Howell, who is a non-executive director. I formally propose Resolution 6 as an ordinary resolution. Shareholders have submitted proxies in relation to Resolution 6 as follows. Shares in favour, 8,240,326. Shares against, 7,013. Shares withheld, 3,256. This resolution is now put to the meeting to vote. Please would you tick the appropriate box on the poll card? I will now close the vote. The poll is now closed. Resolution 7 is the resolution to re-elect Philip McRae, who is a non-executive director. I formally propose Resolution 7 as an ordinary resolution. Shareholders have submitted proxies in relation to Resolution 7 as follows. Shares in favour, 8,240,326. Shares against, 7,013. Shares withheld, 3,256. This resolution is now put to the meeting to vote. Please would you tick the appropriate box on the poll card? I will now close the vote. The poll is now closed. Resolution 8 is the resolution to re-elect Conrad Boner, who is a non-executive director. I formally propose Resolution 8 as an ordinary resolution. Shareholders have submitted proxies in relation to Resolution 8 as follows. Shares in favour, 8,240,326. Shares against, 7,013. Shares withheld, 3,256. This resolution is now put to the meeting to vote. Please would you tick the appropriate box on the poll card? I will now close the vote. The poll is now closed. Resolution 9 is the resolution to re-elect James Gregory as a director of the company. I formally propose Resolution 9 as an ordinary resolution. Shareholders have submitted proxies in relation to Resolution 9 as follows. Shares in favour, 8,240,326. Shares against, 9,018. Shares withheld, 1,251. This resolution is now put to the meeting to vote. Please would you tick the appropriate box on the poll card? I will now close the vote. The poll is now closed. Resolution 10 is the resolution to reappoint Hayes McIntyre LLP as auditors of the company and to authorise the directors to determine the auditor's remuneration. I formally propose Resolution 10 as an ordinary resolution. Shareholders have submitted proxies in relation to Resolution 10 as follows. Shares in favour, 8,238,947. Shares against, 10,397. Shares withheld, 1,251. This resolution is now put to the meeting to vote. Would you please tick the appropriate box on the poll card? I will now close the vote. The poll is now closed. Resolution 11 is the resolution to declare an ordinary dividend of 5.5 pence per share and a special dividend of 5.5 pence per share on each of the company's ordinary shares for the financial year 2024-2025. As explained in the notice, if approved, this will be paid on 17th of October 2025 to shareholders who are on the register of members at the close of business on the 26th of September 2025. I formally propose Resolution 11 as an ordinary resolution. Shareholders have submitted proxies in relation to Resolution 11 as follows. Shares in favour, 8,250,582. Shares against, 13. Shares withheld, 0. This resolution is now put to the meeting to vote. Please would you tick the poll card. I will now close the vote. The poll is now closed. Resolution 12 is the resolution to authorise the directors to allot relevant securities subject to the provisions as set out in the notice. I formally propose Resolution 12 as an ordinary resolution. Shareholders have submitted proxies in relation to Resolution 12 as follows. Shares in favour, 8,161,172. Shares against, 88,800. Shares withheld, 623. This resolution is now put to the meeting to vote. Please would you tick the appropriate box on the poll card. I will now close the vote. The poll is now closed. We now come to the special business of the meeting. Resolution 13 is the special resolution to allow the company to disapply shareholders' preemptive rights on the issue of new shares subject to the provisions set out in the notice. I formally propose Resolution 13 as a special resolution. Shareholders have submitted proxies in relation to Resolution 13 as follows. Shares in favour, 7,578,395. Shares against, 671,549. Shares withheld, 651. This resolution is now put to the meeting to vote. Please would you tick the appropriate box on the poll card. I will now close the vote. The poll is now closed. Resolution 14 is the special resolution to allow the company to disapply shareholders' preemptive rights on the issue of new shares in connection with an acquisition or specified capital investment, subject to the provisions as set out in the notice. I formally propose Resolution 14 as a special resolution. Shareholders have submitted proxies in relation to Resolution 14 as follows. Shares in favour, 6,613,028. Shares against, 1,636,916. Shares withheld, 651. This resolution is now put to the meeting to vote. Please would you tick the appropriate box on the poll card. I will now close the vote. The poll is now closed. Resolution 15 is the special resolution to allow the company to purchase its own shares subject to the provisions as set out in the notice. I formally propose Resolution 15 as a special resolution. Shareholders have submitted proxies in relation to Resolution 15 as follows. Shares in favour, 7,479,508. Shares against, 1,963. Shares withheld, 769,124. This resolution is now put to the meeting to vote. Please would you tick the appropriate box on the poll card. I will now close the vote. The poll is now closed. You'll be pleased to hear that Resolution 15 was the final resolution of the AGM and concludes the formal business of the meeting. Thank you for joining us here in the room and remotely. The directors do appreciate your continued support and look forward to seeing you all in 2025. Please would you now sign the poll card and hand it to the representative of MUFG Corporate Markets, who will be coming round to collect the poll cards. The final results of the voting will be published via RNS later today. We'll also publish the results on our website as soon as practicable. We will now open the floor to questions or statements from those who've joined us. Please can I remind you that you should say who you are and, if relevant, where you're from. And please can we keep it brief so that we can allow lots of questions to be answered. Maynard, I'm happy to come to you first because I know you wish to make a statement.
My statement's not brief.
Well, can you make it as brief as it's possible to be?
Maynard Payton.
Well, then I reserve the right to cut you off if you go on for too long because I wish to have other people.
Okay. Maynard Payton, shareholder. Thank you, Mr. Chairman, for allowing me to make this statement. I'm a retail shareholder and have owned System1 shares for 9 years. Witnessed the company's many ups and downs during that time. I have become much more positive about the business following the early success of the platform strategy during the last 2 years. But following yesterday's update, I no longer have confidence in the executive team to maximise the value of this business for shareholders. And I believe the best course of action to create shareholder value is for the board to sell the business, or at the very least undertake radical executive changes. Yesterday's trading update was quite a bombshell. The update revealed a forecast of unchanged revenue for FY26 versus guidance issued less than 3 months earlier of 15% revenue growth. I recognise business never runs smoothly and growth never happens in a straight line, but the scale of the revised guidance and the short timescale in which it occurred is truly shocking. Yesterday's revised guidance committed one of the stock market's cardinal sins, over-promising and then quickly under-delivering. I simply don't believe industry conditions have changed so much since July to warrant such a significant reduction to expected revenue. Now, I'm not being clever with hindsight here. So on 11th of July, I participated in an investor call with the executives to discuss the full year results. I asked about what underpinned the then 15% revenue growth guidance given the subdued Q1. I was not convinced by the response, and on 16th of July, I emailed Canaccord with feedback from the investor call. I wrote, FY26 guidance of 15% total revenue growth is welcome. The management were not entirely convincing about what supported that 15%. For example, references to seasonality. The 15% projection requires platform revenue to advance 26% during quarters 2, 3 and 4, which would result in some very exceptional quarters in H2. And at present look ambitious following that Q1 update. As such, I would have expected more commentary on what exactly is going to support what for now seems an optimistic 15% projection. So shareholders have to trust management to issue credible guidance. And the 2 preceding strong years did give management the benefit of the doubt of that 15%. But now looking back, it seems ridiculous the executives were happy to publicly forecast 15% full-year revenue growth, when an outside retail shareholder such as me could easily doubt that projection. This sudden guidance downgrade really begs the question whether the executives have completely lost touch with what is actually happening within the business. The other year, shareholders were told of a new performance culture within the business, which would deliver top-class outcomes to clients and in turn create value to shareholders. The early signs were very promising, but James ominously mentioned having to further professionalise the workforce, and in a recent webinar, and I fear System1's lifestyle culture remains firmly embedded within the business. For example, I still note Chief Innovation Officer Orlando Wood continues to plug his own marketing course and make indulgent films. Chief Customer Officer John Evans is often too busy talking about himself. He mentioned System1 during his globe-trotting podcasts. The new Innovation MD, Justin Findlay, also admits to doing guided meditation in the middle of a wood during a works offsite day. I fear these examples are just the visible tip of the iceberg of keeping employees happy rather than shareholders happy. Following yesterday's update, James' LinkedIn feed provides a further kick in the teeth for shareholders. Just a few days ago, employees past and present celebrated 25 years of System1 at shareholders' expense with, and I quote, live music, pink cake and fizz. And as employees danced the night away, shareholders have since lost 35% of their money as management seemingly prioritised parties before profit. System1 may be deemed a great place to work, but ultimately great places to work have to deliver for the owners. Less than 3 years after the general meeting that asked for new leadership, System1 shareholders are once again left to wonder whether this business is being run for the benefit of the shareholders or for the employees. The share price is now back to a level first achieved 14 years ago. And I am convinced the independent non-execs, Rupert, Sophie,
Nice of you to use that.
Rupert, Sophie, Phil and Conrad must immediately rebuild shareholder trust by seeking fresh executive talent that can issue credible guidance, can actually run the business for shareholders, and can finally exploit System1's IP to the full. The obvious solution is a full sale of the business, whereby a larger trade player could integrate System1 into its own sales network and give hapless shareholders a clean exit from a business that has offered so much promise but delivered so little since its flotation 19 years ago. Finally, I would call on the major institutional shareholders, BGF, Herald, Kestrel, Crucible, Ennismore and Octopus, to engage with the 4 independent non-execs and instigate the necessary changes. Thank you for listening, and I will publish a copy of this statement on my website, maynardpatent.com, in due course.
Thank you, Maynard. Well, that wasn't too long. That was all right. And you've made your point of view very clear. I'm going to just answer some of your macro points. You make it sound like forecasts are plucked out of thin air by management. They're not. Forecasts are done by canvassing every single major client on what they're planning to spend in the forthcoming quarter, half, and year. The forecasts that we talked about in July were based on client confidence. And in fact, at the time, we even debated whether those forecasts were too conservative. Thankfully, we didn't. But we did debate that point. And what happened is this market changed fundamentally in August. And you only need to read the releases from M&C Saatchi last week and this week from both Mission Group and from Ubiquity, making very similar points to the ones I'm about to make. I'm old enough to have seen, I think, 2 proper, if not 3 proper downturns in the advertising market. And I've seen nothing like this. And it is caused by the carnage of the Trump tariff regime, particularly in the US, but it's affecting things globally. So what happened is we had a terrible August, completely unexpectedly, where the clients told us that not to worry, that would all reappear, that money would reappear in September. That's what all the major clients told us. Basically, none of that money reappeared. And I've called round all weekend, all the people I know in my industry, and there's a very odd state of panic going on in the business community, particularly in the US, about the impacts and cost effects of the tariff regime, which are material. And as ever in those situations, what people do is that they stop doing anything they can stop that's discretionary. And unfortunately, throughout history, that has always included advertising, which always comes back. And if this was a normal recession, I could predict you quite confidently when that might come back. Right now, we can't. We really can't. So our clients are still saying everything's going to come back in September and October, but we now no longer can trust that because that's not what happened in August and September. So that's why we put out the statement yesterday. I think to state that you've lost confidence in the executive team after their performance over the last 2 years is frankly ridiculous. I have 100% confidence in this brilliant executive team who are managing a very difficult process extremely well. I hear what you say about selling the business. As you know, as a board, we always consider all the options open to this business to the benefit of shareholders, and will continue to do so. What we have to do short term is manage our cost base as best we can. But we actually have more clients now than we had a year ago, and the best new business pipeline we've had in our history. So what you have to decide as a executive team and as a board is, do you cut costs to an extent that you put yourself into a doom loop? Or do you actually manage your costs as best you can, but recognize that you have to service those clients? And at some point, very little visibility right now, but at some point that spend will come back. We have in just the last 6 weeks won globally one of the biggest streaming services in the world. We have won a huge soft drink business in the US, the first of a top 3 credit card business in the US, and also globally expanded our business with the world's largest retailer, I suppose, massively, all in the last 6 weeks. But that money does not flow through till the second half, or perhaps even into next year. So the decision we have to make as an executive supported by the board is, do you maintain the workforce to manage that business and grow it and get back to growth, or do you slash and burn and risk going into a doom spiral? Well, we're not going to do the latter. We're just not going to do it because it would be stupid. And we're not going to change the executive because they're a first-class executive who have delivered for shareholders in terms of beating the market the last 2 years. We are now suffering alongside the market. This is not unique to System1. And we're going to do everything we can to get this business back into growth so that shareholders benefit. But we're certainly not closing down any kind of future possibilities for the business. It's not our business to do that. Our business is always to look for the best solution for shareholders. But that does not include panicking short term. I will not panic, Maynard. Questions? Any other questions?
With regard to the investment in the innovation team, how is you've had 6 months of Tristan and the team. Well, how is that progressing?
I'll let James out, but we're 30% up already year on year. So
results are looking good in the short term as well as in the long term. We brought in Tristan, mentioned by Maynard, to the team in March. We brought in a head of sales in April, May time, and a head of sales in the US in June, July. So the team, if you imagine, are on a relatively short basis, despite you tend to have a relatively long cycle if you're winning big accounts. But it's fair to say, yes, so short-term numbers. So at TYI, our innovation product sales are up significantly year on year for the first half. We've had some excellent wins. So with, for example, the first bit of work with the world's largest confectioner, for example, so we always have the difficulty of not being able to name customers. So without having my cheat sheet written in front of me, I'm trying to work out how I can name them. But 3 to 4. And when we come through to sort of future statements, we'll be able to identify some of those. But we are winning in spaces where we haven't been able to win before. And that's because we have more credibility in that space. We have focus in that space, and it's starting to work. Having said that, it's growing off a small base. So it's going to take some time till it actually becomes to the level of where our advertising business is at. But we've made the right early steps in that space.
There's a couple of other points I want to make, because Maynard's statement, while I disagree with a lot of it, does raise important issues. So your commentary about Orlando and John Evans completely misunderstands the value that they bring to this business. So we have now a record number of inbound leads from marketing directors, most of which are generated by John Evans's Uncensored CMO podcast, which is the most listened to and most subscribed marketing podcast in the world. If John did nothing else, and he does a hell of a lot more, he would be of immeasurable value to us. Orlando is a genius. Orlando is the spark that turns a business from being good to great. And Orlando's course is educating. It's called APE, which is Advertising Principles Explained. He is teaching the next generation of marketers why System1's methodology and why emotion in advertising is so important. He is educating a whole cadre of future clients into why they should think about the methodologies that System1 particularly espouses, as well as then working in the business to help design our products. And if you can't have a small party with one girl with a guitar who's a friend of somebody at System1 to celebrate 25 years, I pay for the guitars, with one pink cake to celebrate 25 years of a brilliant business, then you're miserable. So that's why I defend that. Well, that's a miserable comment, frankly. Any other questions?
Can I just reply to that?
Yeah, of course.
I've been a shareholder for 9 years. If you've been a shareholder for 9 years, you will be good.
Yeah, but if you think that the best way to run a business is to hair shirt it instead of facing up to the challenge, encourage your people, motivate your people to do better, then you haven't run a business, and I have, and I know what's the right way to run a business. Any other questions, please? You've had enough, Maynard. Thank you. Any other questions? Yes.
You talked about 80 new customers in Q1, I think, but there wasn't a figure disclosed for Q2.
Yeah, we haven't closed our quarter yet. So the numbers we put out into the market were just in terms of the timing where we're at. We will actually be sharing in October the full Q2 numbers, and they will come at that point. But it's fair to say that, as Rupert mentioned earlier, new business in the first half, and so continued into the second quarter, remained really positive. Positive both on a customer account and on the total revenue that's bringing in. So that part of the business is working really, really well. I think, as Rupert mentioned beforehand, what we're seeing as a business and what we talked about in our trading update yesterday is a soft underbelly of our large customers who are either pausing, delaying, or doing smaller amounts of work with us. So not leaving, they are still with us as customers.
And not going anywhere else as well. So this is really important. We haven't lost any business. This is just people are spending less. It's very important.
So geographically, I think in Q1 you suggested Europe had been particularly soft.
Yeah.
In Q2, has it become more widespread across Europe, UK, and the US, or?
Yeah, two parts. So Europe remains tough. I think it's fair to say you'll see that with lots of businesses who trade into there, and mainly because lots of our businesses in Europe are ones who export into the US and have been faced into those various tariffs that were mentioned. The US has had a tougher second quarter as well, so we'll remain positive in the first half, but we'll have a tougher Q2 on Q2 than it had a Q1 on Q1. We've also had not as an excuse, but there is also an FX headwind that flows from the US as well, which isn't insignificant. But again, when we talk about our results, we'll be able to share more detail either in October or in December.
Yeah. Question?
Yeah, sorry. I'm Sam Morland. I've got a couple of questions. In terms of, you said before, you've been outperforming the market. Now you're going down with the market. With your talks to peers in the industry, do you feel you're still outperforming, or this downturn you're doing is the same as everyone else?
Hard to say. It was uncanny that the Ubiquity sort of percentages were almost exactly the same as ours of what they reported on the same day, completely unknown to us, obviously, until we read it as well. I would say history shows that recessions, and as I said to Maynard, I'm not sure this is a conventional recession, shows that challenger brands like ours can actually do well, because when times are really tough, the client community will look beyond the usual big, boring global suppliers and will actually consider, or are more likely to consider, smaller challenger brands like ours. So we see it, if we can get all our ducks in a row, potentially as an opportunity. But as I said before, this isn't a normal recession. So the feedback I've been getting from our peers and the broader advertising media community is that we're all suffering a pretty similar fate. I haven't seen anybody yet who's bucking the trend. There's bound to be somebody who is. And obviously, if I ever see that, I'll try and find out how. But the way we're looking at it, and we're spending all afternoon together to look at what we should, what other things we should do, including looking at some of the points that Maynard raised, is we are going to, see what more we could do to at least outperform the market. I mean, ultimately, you can't buck market trend. I mean, for example, we have major pharmaceutical clients who are looking at massive cost increases on imported ingredients, and then have a president who stood up 2 nights ago and told them their products were killing people. I mean, it doesn't really help. And the chaos in the pharma sector in the US is pretty frightening. I think the boss of Eli Lilly was saying this morning, I know he was trying to get prices down in the UK, but was just saying generally the macro environment, it is partly the tariffs themselves, but what our clients are telling us is they were expecting by now that at least they'd have settled down and they knew what's what, but they still don't know. Stuff's moving. I mean, every time there's an international summit, it changes. Somebody, he meets with Putin and things changes. He meets with the EU and things changes. He's now gone off to the UN and upset everybody, and no doubt something else will change. That's the problem, is they don't know what the outcome's going to be. And uncertainty is the enemy of marketing spend, always has been.
I think just to add to it, Rupert, so the thing that we can do at the moment is ensure that we're truly focusing on driving that demand. So you take this week just as a week, for example, Last night we had a launch with Ardman, one of our partnerships of a bit of thought leadership we've done with them, which is excellent in showing how do you create true sort of showmanship advertising in that space. And also this week, we're also part of, with ITV, in partnership with ITV, 70 years of advertising, and what does great advertising look like? And just also to come back on the earlier comments on Orlando and John, the reason we get invited to those partnerships, the reason we're on there is because we have the credibility of people like Orlando and John who can stand on a stage and actually project, not just as a supplier vendor, but as a voice in the industry, what it means. And they are incredibly strong in driving our new business generation, both directly through inbounds that will come from a course or from a podcast, or through that wider perspective that they can have because of their brands they've been able to build up.
Yeah.
I'm sorry.
Yeah, carry on. As many as you want.
Was on terms of staff morale, which you talked about the LTIPs. Now it seems sort of worthless in a sense, or maybe. But how many people benefit from? How many executives benefit from the LTIPs, and what does that mean for morale going out for the next few years?
Fortunately, I regularly take yoga on a Monday evening, so I'm feeling quite meditated and calm about it. But Phil, maybe do you want to help?
Not in the woods, though.
Not in the woods. That's in a local village hall.
Yeah. Obviously, the details of the shape of the scheme are within the annual report that's been published. In terms of membership, so both the executive directors are members of that scheme, and beyond that, there's a team of 8 of the exec team that benefit from it, or could potentially benefit from it. Clearly, we're still 6 months away from the start of the first period, so the start of FY27. So I don't, sitting here today, clearly, I'm sure management will have a different view of the likelihood of achievement, but I certainly don't feel we're in a position we should be ripping it up and starting again. We have a structure of both fixed remuneration, in-year remuneration, which we have used really tactically in the past when we've had strategy changes and we've had previous challenges in revenue trajectory. We've used those really well to kind of motivate and align the behaviour of people in the business with the business's objectives. So they're all still in place. And as I say, we're still 6 months away from the start of a 3-year period of LTIP assessment.
I mean, it is a management challenge in times like this. I've been there myself in person in the past to keep up morale, but you know, what you have to project to management, to the staff, is confidence in the mid to long term, which we have absolutely bundles of confidence in the mid to long term, that you're doing all the right things in the short term, that you're not blaming them, except where very specifically if somebody has underperformed, then clearly that as a normal course of business, you'd be exiting underperformers. But people who are still working damn hard and delivering, good results, you have to keep them motivated, and it's hard. That's going to be tough, but we know how to do it. James and Chris are held in huge regard by the team at System1. It would be catastrophic if we changed them or lost them for any reason. And so I hope to God you're going to hang around for a bit. Yeah. Despite what Maynard said, it would be absolutely catastrophic to the business, trying to change people who are manifestly successful previously and also are doing a cracking job of managing a very difficult situation.
And if it helps, I remain optimistic. I mean, if you wind the clock back 2.5, 3 years ago, we were in a period where the top line hadn't grown and we were facing challenges. And then we delivered roughly 25% top line growth 2 years on the row. And that was working very, very well until the last 6 to 9 months when we have felt challenges to it. But fundamentally, does the product work? Yes. Do people want to buy it? Yes. And have we got the right team and the right culture to go and deliver it? Yes. Is there more we can do to continue and improve always? I mean, that's the fundamental job. That's what I go in every day and I have to tackle with Chris and the rest of the executive team on that place, supported by the board. But we're here because we're optimistic that we can continue to grow the business for the long-term value for yourselves as shareholders and for everybody involved.
Other questions, Jim? Yeah.
Can you just comment a little bit about channel mix in terms of, obviously, terrestrial TV advertising is perhaps declining. You've a test your ad for TikTok, for example, is a recent innovation. How do you see the advertising market across various channels that you address?
Yeah. So, I mean, for that reason, we've been expanding the product suite over the last couple of years. So as you said, we had originally sort of test your ad products that was then applicable across them all, but we've come in much more targeted. So having an out of home offer, an audio offer, a digital offer, a print offer, etc. We've seen some really good traction with our partnership with TikTok and then the products which we offer in that space, which is great. We've seen a lot of the behavioral science applies across many parts of it. Yeah, if you want to create greater showmanship, you want to build your brand, you want to drive long-term brand growth alongside the short-term sales, but the tactics that then you use in the different channels will be different, which is why we have those different products. I think as a very long-term thing, I mean, it's very obvious that the market is trending more towards the digital space. A lot of that is also about when you look at the total spend, you'll see people like spend on Amazon buying AdWords on Google, which isn't necessarily traditional advertising, but will fall under that bucket where that's also been taking a lot of spend. And I think the position that we have, which will give us a good defense and good sort of opportunity, is we can still help people understand how they can grow a brand on those channels rather than just go down the route of standard 2-for-1 buy now sort of direct marketing. And I think that's our position. It's worked really well in the TV space and can definitely apply to those other parts, which is why we're seeing success, for example, with TikTok.
Yeah. Those media partnerships are working well. So we've got partnerships with ITV, with TikTok, with ABC in the States, with, you know, those things do work well. And LinkedIn, obviously, where they build our product into their sales efforts as well. So it's sort of mutually beneficial. Those things are working very well. And again, have protected us from some of the worst of what's going on at the moment in the market. Are there any other questions? Yeah, go on.
The inevitable AI question.
Aha.
I know that you're working with Warwick Uni on AI, and we've seen some AI generated adverts that I think scored very well under the System1 mythology. Could you perceive an AI threat to actually the testing of adverts?
Human
responses that you have built into your system.
Opportunity as well as a threat.
So we and we'll talk about more in our. So we have a Capital Markets Day on the 22nd of October, and one of the topics we will be going into there will be AI. So in particular, how we can build out our product suite, so both our innovation and advertising products in that, how you can underpin everything we do. I mean, everybody today, whether it's using a phone to find his venue in the morning, like AI is everywhere now, and how we can use it for efficiencies within the business. Just 3 areas that we can really look into it. If you think about the value chain and where it works, does AI mean that people can create more advertising and more ideas that need testing? Yes, fundamentally. So you can imagine actually a world where there is increased demand for testing off the back of it, especially if it's coming in from a more either commoditized or differentiated way than it has been coming traditionally. If you think about opportunities lower in the value chain, so could you swap out human respondents for synthetic respondents? Yes, and other vendors are doing that. We API to multiple vendors, so if that becomes appropriate for our business, we can do that. And then in our space, one of our sweet spots is truly understanding human emotion. Now, we have an incredible database. We have over 140,000 adverts in our database, over 60,000 new products or innovations in our database as well. So if you wanted to truly build out AI that was able to mimic human emotion to be able to offer the services that we do, you need that level of data. So we're also in a really strong position in terms of having that data, which something can be trained on, hence the learnings with Warwick and other partners we've been doing since that point. So I think actually I think as an overall industry macro perspective, yes, it's there. Yes, it can be seen as a threat. For System1, there's quite a lot of upside on that space too.
And it's a lot of the excellent work that John's been doing, doing those partnerships.
Well, I'm not allowed to say anything about it.
Yeah, well, not at the moment, no, but we will. You can say whatever you like, mate. You can say anything you like, but certainly it's going to be a key part of the Capital Markets Day, that's for sure.
I've been writing songs.
Yeah, it writes songs as well.
Now that is not party frivolous. This is to help adverts, so Unilever's Sunlight. There's nothing new to say about dishwash liquid, so I'm trying to bring the jingle back with a song about sunlight.
AI writes extraordinary jingles. It's quite interesting,
which they love.
Anyway, so yes, we are looking at it very much from a business perspective, but also playing with it with some clients because it's early days yet. The best bit of advice we ever got from I've got a friend in New York who's seen as the kind of AI called Noah Breyer, who's like the AI guru in New York. And Noah's he's actually a friend of my nephew, as it happens. But I've met Noah, and he's done a masterclass for us. And he just said, "Look, the only advice I can give you about AI is make multiple small bets because if you make a big bet, you'll be wrong, because everybody's going to be wrong. What you need to do is lots and lots of very little, very cheap bets and see what happens, see what works. You'll learn each time. And that's kind of what we're doing in partnership with our clients.
Yeah, and I mean, we are trying to be on the forefront of this. A good example. So again, without being able to name customers, but we carried out within partnership a project for a customer. The first time working with that customer in the innovation space, a large global brand, and we were able to use their AI, which was very much focused on sort of scouring human emotion across internet, etc., data points, alongside our testing as a way to truly accelerate their experimentation and the potential go-to-markets in a new region for them. I think so those are some of those opportunities where you can move quickly in partnerships, etc., before we work out where the market's going to trend and where it can go. So there is real upside for us in that space.
One question. There's one question. From,
okay, sorry, Chris.
Yeah. So there's a question from Christoph L. If the market has turned down, is this a good time to be increasing expenditure or inverted commas investment?
This probably comes from multiple studies, which are that's a question normally aimed at the client community, because there are multiple studies, notably by Procter & Gamble, showing that actually the best time to gain market share is in a recession, when you get more bang for your buck than by outperforming your competitors. When it comes to the narrow System1, I wouldn't say this is a time for us to invest more. I think it's the time for us to stick to our guns with what we've already invested and committed, because it's beginning to work, and that's in the innovation space. Now, of course, there's fine tuning to be done and so on in the new world we find ourselves in. But, we made that commitment to invest in our innovation product, which we're doing, and innovation people. So I wouldn't say with the System1 hat it's time to invest more, but it's definitely time to hold our nerve and to stick to a strategy that has so far served us very well, although we will always look at it on a sort of continual basis in case it needs to be adapted. Yeah. Any other questions? Yeah, please.
If you
could, could you say?
Yeah, Oliver Levy. If
Hello,
you could,
Oliver.
hi. Tell me, to predict your data and improve your data, it's labeled as, one is labeled as sort of data and data-led consultancy, and the consultancy is going, the other is data. Could you just walk me through what you mean by data, winding that back? Because often data spend doesn't go as volatile as you're showing here.
Yeah.
Volatile.
I'll take this.
Yeah.
So I think the other word that could be applied to it would be predictions. So we have a platform which in our advertising, our innovation, or in our brand space allows us to predict an outcome. So how likely will your advert drive long-term brand growth or short-term sales and impact on your overall brand fluency? Those reports are driven through an automated platform. So, and that's what we refer to as the data. So if I'm a customer, I want to upload my ads to the platform, I want to understand the impact that's going to have on my business. That revenue derived from those tests and those predictive outcomes are what we call data. The data-led consultancy is when our consultants are able to help the customer truly understand what that says, but then improve it further. So we have those database of adverts, we have that database of innovations, so we can go on and we can inspire, we can say, use of jingle earlier, like how does your sound work? Like how could you differentiate your products better? How could you add more surprise or have less surprise, depending on what you want to add into the overall product you're developing? So that data we offer is in reality sort of almost project-led deliveries of data, but the data is a prediction and outcome. It's not a SaaS subscription to access to an X number of data points across a market, which is just fed through onto a platform on a daily, monthly, or yearly basis.
And perhaps my question was, I understood a little bit, I understood some of that in the sense that that's what I thought. My question comes to, how do you price for clients? So do you have, what visibility do you have? That's sort of,
our revenue model is that for the majority, our brand business tends to be long-term commitment, because people might have a brand tracker for 2-3 years, for example. Access to our database, so those 100,000 plus adverts that I've talked about, is on a subscription basis, but that's the outside of that's 10% roughly of revenue. The 90% of the rest of the revenue will come on a project basis. So we do work with customers to get towards long-term commitments that allow them to have, for example, certain rate cards based on spend commitments, etc. But what we don't have is cash up front which is then drawn down against, which would be more of a traditional kind of subscription project-based business. Now, again, something which we can look at further in terms of giving more consideration of defensibility in downturn, for example. But the advantage of that business model also does mean that when you are growing, you are able to grow faster than the market. So part of the reason we've been able to grow faster and have sort of good competitive pricing is because of that model as well. So it's something, again, it's a topic Rupert mentioned, we've got time later on today. It's one of those topics on the table of refinement of pricing models, for example, in a downturn, and would you want to consider something different?
And then thinking to that pricing question is, what do you think your return on investment for your clients is by using you? Do you have a view on that? Are you generating 10 times return, 5 times return for them?
Yeah.
Every $100,000 they spend with you, how much do they save?
Well, I mean, I think so.
Depends how good their ad is.
Yeah,
I mean, it's going through your system and you're refining it.
Yeah, so I mean, we have, and if you want to, we can definitely share. So we have shared. So we have, I think, on our website, we have various validations that take you through the various levels. So if your category average star score is X and you are Y, this is the long-term brand market share you can steal for it. We also, that's what we tend to work with on our customers. So when we have like a new pitch conversation, it's very easy for us to have a conversation to say, look, you know the business results you've had over the last year. You've run 10 campaigns. We can tell you what we predicted those campaigns to do. You know the results, do the correlation and see if it works. Our predictive correlation is what allows us to win in that space.
We're ahead of the market by a long way on the predictive, what we call predictiveness, and which is the predictive correlation.
And I think the end of the bit also to reflect. So if you think about, say, for example, in the advertising space, pre-testing is worth about 1% of total spend in advertising. So the money spent on us is very, very much worth it, either to work out, should you air that ad in the first instance? Should you just air it for the minimal amounts, or should you really be doubling down on this one as you go forward? Because that's where the long-term return is going to come as well from this.
Which clients are we allowed to talk about?
Not many, John. But Pfizer, for example, or God,
I don't know the figures for that one. Any others?
No. Who are you talking about? Who do you want to talk about?
I don't know. Just tell me.
So I'll ask another question.
Name one
So
from the
basically,
past.
in principle, in answer to your thank you, John. In answer to your question, the market research, the spend that they give us when they have a 4 or 5 star ad and their brand share grows, these are big companies. The answer to your specific question could possibly be 1,000 to 1.
Yeah.
I mean, or massively, it could be 10,000 to 1.
So with that data point, and let's just say it was 10 to 1. Forget 1,000 to 1.
It's much more. Yeah.
Why would anybody cut a penny of spend unless they're not airing ads at all?
That's the point.
Right. So if they're not airing an ad at all, I get it.
Yeah.
Sorry.
If that
Maybe I should have said also in my commentary is a lot of what's happening. So I was talking to a non-executive director friend of mine of one of the biggest, if not the biggest retailer in the UK, who said basically they're having the discussion about rerunning their Christmas ad this year, not doing a new one. Well, then if they do that, there's no testing, so we get zero revenue. And they're protecting. In fact, there was a report about a week ago, and I've been trying to find it. I've definitely read it, but I couldn't find it. That's showing that clients are protecting their media spend, in other words, their reach, by cutting advertising production, i.e., making one ad instead of 2, or no new ads. And inevitably, if they make less ads or use old ads, they use less of us. That's the issue. So that's how it tumbles down the system. But the ones who are making new ads, our clients always test them because the value is absolutely immeasurable. And one of the things we are looking at is, as James said, in this environment, maybe there are more solid contracts we could negotiate with some of the clients who have shown, at least over a couple of years, that they do stuff every quarter, even in difficult times, even if it's less. And maybe we could have a more retained relationship. Although again, this week in Campaign Magazine, it's a big article saying the move from retained relationships to project relationships in ad agencies is growing exponentially. So perhaps our model is where the world's going, and fortunately we know how to work it better than most.
and your clients are the end customers, do you also have ad agencies as major clients? You think every ad agency has to use you?
Yeah, so over 90% of our revenue will come from end customers, end brands. We do work with agencies, so either that is because they want to use us to help validate their work before they're putting it in front of a customer. They want to help convince a customer that they're better than another ad agency, or because we have strong relations with them as well. Again, we do try and, I think because of our celebration of creativity, whereas lots of our competitors tend to bring things back to the norm and sort of almost dumb down creativity in a way, we are seen more favourably by them. I think if you look in that space at the moment, there aren't many who have a wonderful set of results who are looking to kind of increase and spread the pie. Yeah, so they are definitely in a place of looking after themselves. So again, we need to make sure we can add value to them, and we're seen as providing value to them and to the end customer, so that we can have that. I think there's probably just one macro point on this kind of questioning as well. What we offer is incredible. Okay, so the predictiveness we offer our customers is it's market leading, better than anybody in the market. The customers who use us truly see that and truly understand it. What we don't have enough is enough brand awareness globally that that's the case. Yeah. So the reason that we invest in things, and again, going back to the earlier point, but for example, Orlando's course is exactly that. If anybody goes on that course, it is 8 hours of System1 incredible, like saying how incredible it is and how it's the only way that you should think about advertising in the future. So for example, it's not surprising that we then win new business off it, or we retain customers for longer on it. The reason that John Evans has his global podcast is because he's able to go and have conversations with the world's biggest CMOs. And again, he's able to talk about, in my role as System1's chief commercial officer, for example, chief customer officer. So those are the bits where we are trying to, in a challenger brand way, extend our brand beyond the norm. We're a small business. We don't have the budgets that the likes of a Kantar or a Google or whoever will be a competitor in this space will have to buy a beach at Cannes. So at Cannes, for example, we do great thought leadership that gets us on the stage. We don't spend any money on that. This is where we are asked to pertain, whereas other people spend hundreds of thousands to millions of pounds just to have a slogan up there. So that for us has always been the focus. Hence the investment we've been doing on long-term brand growth. If we get that right, the more we win, the more we retain, the more that will cycle upwards. And again, that's what gives me the hope. Back to that question earlier, that's what gives me hope. We've got that momentum, that flywheel spinning. We've just got to keep pushing it.
Any more questions?
Another question
Okay.
online from Christoph L. again. I'm struggling to reconcile the board's positivity and the fact that the share price is down almost 70% in the last 12 months. Please summarise why investors should remain invested.
I would say if you take a medium-term view, if you take a short-term view, I can imagine that you are a bit depressed. If you take a medium-term view, which is the view as a board we have to take alongside the short-term view, we're extremely confident because we know our product outperforms, we know our people outperform. And the thing that gives us the most confidence of the lot is we haven't lost clients, and we've got the best new business pipeline, certainly in recent history, in terms of not just the number of clients we're winning, but the nature of the clients we're winning. We're talking about big global industry leaders that we are starting to win. In one case, taking the entire global business off one of our mega competitors, and in other cases, taking significant share off mega competitors. That's what gives us confidence for the future, alongside what I've seen from this executive team, and how seriously they take both the management of the business, the delivery of the strategy, and their desire to give a good result to shareholders. There is absolutely no indication whatsoever that anybody on this table wants anything other than the best for all our shareholders, and we need to deliver to that. But the market is the market, and you can buck it to a degree, and we're going to look for every way we can. But the great thing about, I always say that I knew that Gordon Brown was a moron when he said, I've abolished boom and bust, because I grew up by the sea. And the tide always goes in and the tide always goes out, whatever you do. Sometimes it goes in and out more. And just when you think things couldn't get any worse, they start to get better. And what you have to do is to make sure you're in the right place to take advantage of it when things get better. The issue at the moment is it's hard to see when that might be, whereas in a traditional recession, it's easier to predict when that might be. I think the only thing I'd be particularly positive about is this might actually change quicker than a conventional recession, because a lot of it is sort of whim and madness based rather than, you know, genuine economic fundamental downturns. So yes, we are midterm confident, but we know we've got a hell of a job to do short term to both ensure the business is in the healthiest shape and to try and recover some shareholder confidence, because obviously we're not remotely happy about where we are today.
Other reasons for optimism, of course, we have a significant amount of cash in our balance sheet, which for any company is very important because it means significant fate is in our own hands.
Good point. Sorry, I should have said
So with calm heads, able to navigate very difficult, uncertain environment, having that kind of balance sheet strength and a strong exec team means we're in great position to navigate this through.
Yeah, something that actually was mentioned on a number of our major shareholders. That's a good asset. Any other questions? Yes, please.
Can I just follow up on the multiple question for the client? Given John's answers, the actual question is, aren't you underpricing your product?
The very first thing I said when I joined this board, and when there was different executive team in charge, is I said, I think our product is too cheap because it's an amazing product. And I think we might be undervaluing it. And actually, we've priced it up quite a lot, I think, John, certainly over the last couple of years. Again, it's something we've got on the agenda this afternoon. Is there a way we should be pricing? One of the things I tried to do in my advertising career was to get more bonus payments by results. Because if, you know, you're predicting something great, you steer a client a certain way, they gain their market share. Is there some kind of bonusing arrangement you can get involved? And again, that's something, a topic we might raise. It's quite hard to do. I got it with a few clients. I tried to, because I was involved directly right from the outset in launching Go for British Airways, First Direct for HSBC. I launched Amazon over here for Jeff Bezos. Never met him, but lots of emails. Blah 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 blah. And I tried to get shares. I wish to God I had. I certainly wouldn't be here. I'd be in Monaco and joining you remotely. But it's very hard to do because of the way the sort of governance works in major companies. Even on a new product launch, you can't get it. But you sometimes can get performance bonuses. And I think that's something that we should be looking at midterm. So good point.
And just on specifically on the tactical point, we did put our prices up by 25% in sort of the first 12 to 18 months after I took on sort of the role. We've also done things like we've launched the ability to ask additional questions on top of it. So what we call Pro Plus. So if you buy a standard test for, call it £5,000, every additional question you ask is another £1,000 on top. So we are both at the macro, so at the top level looking at pricing, but also how can you drive value for the customer, which they're happy to give you the revenue back for. But I agree. I mean, the value which we deliver for customers, if we could link it to a percentage of choice, then we can get help. John, yeah.
Since I've set a hair running, market research in general is bought by the yard. One of the things I've always felt, and we're going to talk this afternoon, is targeting the CFOs of companies where you have actual proof of the increased brand share and the money that brings in for the company. No one's ever done that. I don't know whether we will, but I think we should. Is that, do you see, market research is sort of, you're
all I can say to that is you have to do it carefully, because I tried it once without telling the CMOs I was going to do it. That's true. They didn't like that they accused me of going over their heads. So, but actually, once you could get a CFO and the CMO in the room together, then the discussion became more mature and more interesting. So this is all stuff we need to look at again, because when things are going great, the machine works. When things are going less well, you've got to look at every component in the machine and see what you can do to make it better, which is, we're starting that very process for the whole of this afternoon. So unless there are, another one online.
Two more questions. How are you improving? This is from Hazem M. How are you improving and strengthening your business moats and strengthening the longer game and longer term sustainability? Are you looking for markets that are out of alignment or sync with the Anglo-Saxon world?
Yeah, well, so I mean, we'll talk about, as we said, the future of kind of advertising, innovation, and AI, which will address a large part of that strategically in a month's time. So I'll leave that part to there. I mean, recently the investment in our innovation offer is exactly that, so that we aren't just beholden just to advertising, but we can also have a growth business in the innovation space as well.
Which is a much bigger market, incidentally,
Yeah.
than the advertising market.
I mean, for awareness, not everyone will know, but we offer our products in over 80 markets as well. So both our advertising and our innovation. So we have got global reach. So we can do it, be that across non-English speaking countries as well. So we do have some of that as well. So yes, I think probably one that we'll come back to in a future point, if that's okay.
And there was another one, Chris, or not?
Yeah, this is probably a very broader question, lifting us out of the kind of near-term business performance. Can the technology you have can technology understanding human emotion be used, for example, for suicide prevention by analysing speech and written communication? John Kieran.
John.
No, not really.
Oh, that's interesting.
No. I'm sorry.
Go on.
No, not really. I mean, partly or mainly because with that specific example, part of the problem is people can't talk. They don't talk. They don't share. So how would you pick it up? And even facial recognition, what? I mean, you're going to find a way to sort of watch people for the whole sort of week, day.
Yeah.
Sorry.
Not
No,
on our current agenda.
Well, it's no, but it's.
Well, no,
I mean, it is.
How can it help
Yeah.
society? You know, beyond advertising. Yes, you can measure the mood of the nation
And political ideas and stuff like that.
Yes, that's.
I think it definitely could help with that.
And
Because again, the focus, the sort of the hegemony of focus groups, where people, particularly politicians nowadays, ask people what they think. What my whole career, what I learned about 99% of focus groups is people tell you what they think you want to hear, and they're trying to be helpful. So people on the whole in focus groups are trying to be helpful. And what they do is they always bring you back to what they already know. So they bring you back to the average. So you might wonder why every car ad has somebody driving on a windy road on the, south of France. That's because if you do a car ad that isn't like that, people say, well, why haven't you got the car driving on a nice windy road in the desert or something? And it's because they're trying to be helpful. They're not trying to be boring or obtuse or they're trying to be helpful. But unfortunately, that is what people do when you try and talk to them rationally about these things. The whole difference with us is we look at how they emotionally respond. And the fact is, if you show car ads with windy roads, they start yawning because they've seen it a million times before. So the whole point is that it's emotional response that makes the difference. And I think that could be used in wider society massively more.
Our current
than it's used
techniques
now.
are basically the broader the population you're looking at, the more it can help.
Exactly.
And when it comes to the original question, about suicide, that's where AI, I think, has something to say. The number one use of AI in the world, therapy, or basically treating it as psychology. Number one.
Interesting. I think unless there's any more urgent questions, I'm going to close it down. I mean, thank you. That was a lively old question session. Maynard, my apologies if I got slightly irritated at one point, but you make perfectly acceptable, valid questions and points, and I'm glad you got your whole statement out. And it wasn't as long as you threatened it was going to be. And I hope that you can see that we've tried to answer your questions, even if you don't agree with the answers. And gentlemen, I hope that you feel that we've answered as fully as we could any questions you have. So I think at this point I hand back to the moderator. So I have to say first, thank you. That brings us to the end of our Q&A session and officially concludes today's meeting. A special thanks to all the shareholders who've joined us today. Genuinely, it would be pretty dull if nobody turned up at all. So thank you for that. And it actually gives us more food for thought for our strategy session this afternoon. So it's genuinely helpful. Even if some of the things we might not like, it's still genuinely helpful because it makes us think. And that's what we need to do. Thank you very much. So if I hand back to the moderator to close the business.
Thank you very much indeed, sir. And thank you to the board for updating attendees today. Can I please ask attendees not to close the session, to be automatically redirected to provide your feedback in order the team can better understand your views and expectations. This will only take a few moments to complete and it's greatly valued by the company. On behalf of the board of System1 Group Plc, I'd like to thank you for attending today's annual general meeting proceedings. That concludes today's session and good morning to you all.